A very good evening and a warm welcome to Personal Finance. I am Gugulethu Cele. Now today in studio I'm joined by Brad Weininger, who's the product manager for FNB Share Investing. Now that's to give us insight into why it's best to start investing now in the market. Good to have you with us today. But Brad, I'm a little concerned because so often when we speak to some of our viewers, they're a bit nervous about entering the market because of all the noise that's out there. Markets crashing, markets seeing significant value. You know, how does one actually determine when they're ready to start investing in the market?
Yeah, it's a good question, and I mean it's something that I think every investor is faced with. You know, do I get in now? Do I wait? What do I do? When do I go? The best thing is literally just to take the plunge. So make peace with the fact that in the short term, markets are going to go up, markets are going to go down, and realize that you're invested for the long term. So it's not about timing the markets. Yeah. It's about getting in now. It's about keeping the money in there, and it's about staying in for the long haul.
Let's talk about this time element because long term is relative to spending, depending on who you speak to. But from an investment perspective, how long is long?
Very true. So nothing under 3 years. So we're talking 3 years plus. But obviously, the longer you can leave it in for, the better your chance of success and the more your chance of actual growth. It's always a good strategy for people, though, to have some short-term cash available and then to put some stuff away for the longer term. So have some investments in things like cash where you're going to have some guaranteed returns that you can access immediately, and then put some money away for the long term. And as I say, I mean, 3 years, 5 years, 10 years, 15 years, you know, put it there, forget about it.
I'm
Leave
glad
it,
you mentioned
don't
it.
look at it, and just forget about it.
Because that's not the kind of money that you're tapping into when your tire bursts or when the geyser
It's not.
bursts,
It's not.
right?
And I think that's one of the traps that we fall into as investors a lot of the time. So people put money in there, and then they realize my geyser's gone, or I need to throw a birthday party for the children, or the tire burst, or something like that. So I think the key fundamental probably is working out a budget and seeing what you can put away, and then of that have a short-term stash that you put away, and then put the rest in away for the long term.
I'm glad you've highlighted the next point, which is how much to invest in the market, because everyone sometimes thinks that you need a significant chunk of money.
That's true. So we often find there's a lot of myths, you know, surrounding investing and investing in the markets. And one of them certainly is it's expensive to get in, and I need to put a lot of money in. And that really just isn't the case. So again, I think coming back to the budget, work out what you can put aside, and then go from there. So I mean, we have a product designed for people that are new to investing, looking to start, and looking to put in lower amounts. So from 300 Rand a month, you can start to invest in shares, and we actually give you access to the top 100 JSE listed companies.
Sure. So that's also an ETF type of model, if I'm not mistaken.
That's absolutely right, yeah. So the product is called Cele. In the background, in the inner workings, what we do is we take two ETFs, which gives the customer exposure to the top 100 companies on the JSE. The benefit, though, for the customer or for the investor is you always hear, whenever you talk investing, diversify, diversify, diversify.
Yes.
What we do through those two ETFs is we diversify their investment for them. So they don't have to choose what to invest in, which is another daunting scenario for a lot of first-time or novice investors. How do I pick? What do I choose? I don't know. There's 400 plus companies listed out there.
True.
So through this product, we give them access to the top 100. They don't have to choose. We spread their risk, we diversify them, and we give them the best opportunity at gains and at returns.
So I'm investing 300 Rand a month using the example of Cele that you've alluded to. What are the costs involved here? Am I paying a monthly membership fee?
Yes.
Do I pay when I withdraw?
So typically you're going to have two costs when you start to talk about investing in shares. So you typically have an account fee or a platform fee. So the Cele has a platform fee based on the value of the portfolio that you actually have. And then you're always going to get your brokerage costs over and above that. So every time you buy shares or every time you sell shares or ETFs, there's brokerage costs that come along with that as well. And you know, have a look around, have a look at calculators. Before you actually invest, go onto an investment calculator. Put in, these are the number of shares that I want to buy, this is how much I want to invest, and actually look at what those costs are. And in that way, you can get to make a smart decision. You know, do you go in small now, or do you save up for 3 months and go in slightly bigger, as an example?
Precisely. What about tax-free savings accounts? We've heard the buzz around this, trying to encourage South Africans to save. Is it potentially possible for one to invest tax-freely in the market?
Absolutely. So as you say, very big buzzword at the moment, tax-free investing, tax-free saving. There's a number of options. So you can go into traditional cash instruments, so money market accounts and fixed deposits and those sorts of things. You can also go into investment accounts, and you can invest in, again, ETFs, exchange traded funds. So the product that I was just telling you about now, Cele, where we give you access to the top 100 and you don't have to pick anything, we take that exact product and we wrap it tax-free. So what that means is, as an investor, you can go into the markets, you can benefit from the long-term growth of investing in shares, and it's tax-free. Obviously, there are limits apply to the product, so it's 30,000 Rand tax year contributions and 500,000 Rand over the lifetime.
The big question is then, how do you monitor how your money grows? Are there innovative solutions perhaps that FNB's brought forward?
Yeah, so we use technology and we make sure that we drive everything digitally as far as we possibly can, and we also integrate fully to our online banking profiles. So you can log on to online banking if you're a customer of FNB's. You can check your credit card balance, you can transfer money from your check account into your credit card, and you can buy and sell shares all in the same place and check the performance of your portfolio.
Fantastic. I'm glad you mentioned that, the mere fact that you're able to access all these various accounts. Given the fact that we've used this particular example of the FNB Share Saver, 300 Rand a month, at any point during some time where I get my perhaps 13th check or some other performance bonus, can I always add a little bit more into that investment pocket?
Absolutely. So you even have two options when we start to talk about the Share Saver or the tax-free offering. You can contribute monthly. So you can set up a standing instruction where every month 300 or 400 or 500, whatever amount you choose, will actually come off of your account and get invested into the market for you. You have to do nothing. Or when you get a bonus, you can put a couple of thousand Rand or however much you have to put into that account, provided it's more than 1,000 Rand, so there are some limits. And you can contribute that ad hoc as and when you wish to.
Exactly. And one thing I've also noticed, though, is that there's a lot of correspondence between the FNB team together with their clients with regard to the performance of their portfolio. So again, if you're still a novice and confused as to what all the news headlines around MTN and its Nigerian fine had to do with the share price declining, you get some of that insight with regard to feedback on your portfolio performance.
Yes, absolutely right. Again, one of the things that we've decided to do at FNB is we've decided not to bombard customers with things like jargon and ratios and all of those kinds of things. So we disseminate relevant information into the market to help them make the decisions, but we steer away from the highly technical and the jargon related and those kinds of things.
Right?
Price earnings ratios, dividend yields, all of those kinds of things. Absolutely right. We find that when you're in it for the long term, so long-term investing, which is where our products sit, you know, those kinds of things are not necessarily as relevant. So like we said earlier, it's about the time that you're in the market as opposed to timing the market, where it's critical that you get in at a certain point, and there you're using ratios and charts and all of that kind of technical and fundamental analysis to help you make those decisions.
Brad, a lot of this focus has also been placed on a lot of younger consumers, trying to get them involved in the market performance. But what about people who are slightly older and perhaps making their way to pension and might have grandkids? You know, is this an option for them that they can also explore?
It's a good question, and it's a difficult question, because I think traditionally you've always heard, you know, the closer you get to retirement, or if you're in retirement, you need to start getting out of the shares and the equity markets and those kinds of things and going into safe havens or cash or guarantees or those sorts of things. I think the prudent answer there is always best to get advice. So every person's individual or personal situation will differ. So it really depends where that person is and what other investments they have and what their goals are and what they're looking to achieve. So always pragmatic to get some kind of advice the closer you get sort of towards that retirement age. And I think the real reason behind that is, in the short term, markets can be volatile and they can go up and they can go down. And that's why if you're nearing retirement, you can't afford a market to go down when you're needing to have access to that money, as an example.
Precisely. Just before we do get our key takeaway points, that coming back to that theme of seeking advice, for those who might be interested in the FNB products, I take it speak to any consultants who might be available, whether internally at a branch or digitally as we do things now?
Yeah, absolutely. So fnb.co.za is a great starting point for all of the information. We even go so far as you can open up the accounts online as well. So you can literally do everything digitally. And then, of course, you have the whole range of FNB services and offerings available to you. So like you say, there's branches that you can walk into. You can pick up phones and phone bankers or advisors or whatever the case is that you may need help with.
Well, we've certainly said quite a bit. Let's get a quick recap now of some of the key takeaways from tonight's conversation. Brad, let's get a quick refresher course as to why it's always good to invest in the market, and perhaps just take the plunge and do it now.
Absolutely. So I think there's a couple of things to consider. So firstly, go through the budget. Make sure that the money that you're going to be putting aside into the shares is something that you can put away for the long term and not have to try and access it in the short term. Make peace with the fact that in the short term, markets do go up and markets do go down, so they can be volatile. But then again, if you're in it for that long run and you're investing long term, over that long term, the market is going to grow for you.
Fantastic. We'll leave it on that note for tonight. Thank you so much for your tips, suggestions, as well as feedback on how to access the market.
Thanks for having me.
Well, that's how we wrap things up for tonight's episode. A big thank you once more to Brad Weininger, who is the product manager for FNB Share Investing. We want to hear your thoughts and your experience in entering the market. Are you still apprehensive and nervous, or have you taken the plunge and perhaps found some fruitful rewards in the long term? Share your thoughts, comments and tweets with us at CNBC Africa using the hashtag Finance410, or to myself at Gugulethu on Twitter. But until next time, we wish you happy saving and investing.